And welcome, everybody. It's another week. We are in the dog days of summer, the dog days of August. Hello, everybody. Alabama, Joe, welcome, welcome. Hope the weather is great everywhere. Quick shout out before I forget John Pro V1. I know I reached you on X. Nicely done, sir. Nicely done. Love that. Love that. Love that you're tuning in every day. Appreciate that. So hopefully everybody had a fantastic weekend. I know here in Chicago, um, fantastic weather temperature wise. We had this continued. Yes, life is good, Jake. You better believe it. Um, we had amazing weather temperature wise, but we had this continuation of this fog and haze coming in from these Canadian wildfires. In fact, I think it was Friday, it's either Friday or Saturday. They said that Chicago air quality was the worst in the entire world. The entire world. But hopefully that's blowing out of here soon. The weather is great, and here we are. I mean, who would have predicted today after Friday? Yeah, Canadian imports, right? I guess they're getting back at us, right? They're sticking it to us. Who would have predicted S&P's up 80 some odd points today after the fear, the anxiety that just kind of hit the market on Friday? I know that I did not have this on my bingo card. I'm not sure if any of you did, but one of the things we're going to talk about, or what we're really focusing in at, and we've done this before at other times, specifically around December with the Santa Claus rally, January with the January effect. Um, there is absolutely stock market seasonality. Now, does it always hold true? No. For instance, sell in May and go away this year. If you did that, which is a kind of seasonal trend, you got hammered, right? It just did not work this year at all. So the sell in May and go away didn't work, and I'm not suggesting that these trends in August and September will work as well. But I got to show it to you anyway. We got to see what we may be in store for. All right. So, yes, smash away. I know a bunch of you did. Thank you. Yeah, I just put, seasonal trends here. We've got our James Taylor winter, spring, summer, and fall. I actually love every season. The one I would say that personally I dislike the most, at least here in Chicago, is spring, because our spring weather is usually really crappy. I love winter. I love winter more in Colorado than I do here. I love fall. Fall here is my favorite season, and obviously summer, lots of golf, and it's usually pretty good here. But there is something called stock market seasonality. So if we go back, we're looking 75 years right now, okay, 1950 on. Major market indices have posted negative returns in August, and that makes August one of the worst months of the year for returns. And we'll see how they rank, how August ranks in a moment here. Okay, but these are averages since 1950. The Dow averages in August down 1.5%. S&P's down 1.2%. The NASDAQ, now this is since 1971. This doesn't go all the way back, down 0.8%. And the Russell 1000, this is since 1979, down 1%. The Russell 2000, which is a little bit broader, also since 79, down 0.5%. Now, how does August stack up to the rest of the year? Yeah, you can see it's pretty poor. For the Dow and the Russell 1000, it is the worst month of the year. Most people think October is. No. For the S&P, the NASDAQ, and the Russell 2000, October is the second worst month of the year. But as I said, this is a year where these trends, maybe they're not holding. Maybe they're not holding. We've seen a lot of things happen in the market that we would not have expected, we would not have predicted. Who knows how the rest of August is going to bear out? I mean, after Friday, we were probably all scratching our heads thinking, oh, here we go again. And then all of a sudden we get this, 80 plus point S&P day today. The Dow is up 400-ish. The NASDAQ right now is up 400 as well. Actually, the Dow is up about 500 right now. So who knows how this is going to play out. But you know what? For us trading, it doesn't matter. It really doesn't matter what the scenario is, because we've learned to take advantage really of any scenario. Low volatility, high volatility really does not matter. So let's take a look at this chart here. Hopefully you can all see this chart. Okay. And what this shows is this is now focusing on the S&P, guys, because that's really what we all kind of focus on. Everyone likes to talk about the Dow, but the S&P is really kind of the best representation there. And July is typically a really good month, and we just came off, pretty good month here. And then we see August here. Okay. Now, look at this column in specific, because this is where we are this year. This is where we are. So if we look at a post-presidential election, August, the median is a negative 0.53%. The average is negative 0.63%. And coming in second worst, the percent positive months, 47% second only to September. Okay, so again, this is since 1957 now, this data, so just almost 70 years. And this is just the S&P. Okay, any questions on August before we move on to September? This is the seasonal effect that we see. It doesn't just typically hit 1 month. It is typically a couple months. We're good there? Okay. All right. September, yeah, it has consistently been one of the worst months of the year. And just how we talk about Santa Claus rally, January effect, there's also something called the September effect. Okay. Now, since 1928, we're going back 100 years almost here. Okay. The S&P has averaged a decline of 1.2% in September and is positive only 44% of the time. If we go since 1950, the stats are a little bit better. The average decline is only negative 0.7%, not 1.2%, like going all the way back to 1928, excuse me. And it's not just the S&P, it's the Dow, it's the NASDAQ as well. Okay, now, there's got to be more to it, right, than just turning up the clock. Seasons are changing, right? Something has to be going on that is leading into the effect. Okay, so these are some of the reasons that famed economists have put together over the years. First one is portfolio rebalancing, tax loss selling. And there is data out there that suggests that institutional investors are selling off positions, rebalancing their portfolio, and taking some tax losses before the end of the fiscal year. Okay. Now, there's also that behavioral psychological side of things where typically after the summer trading months, which are typically very, very slow, okay, investors return in September, reassess their portfolios, and get more cautious. Now, there's also big economic factors in business cycles. Okay. September is typically one of the slowest economic activity cycles of the year. And that's after the summer months and ahead of third quarter earnings season. There's kind of a lull there. And then it's that back to school effect, okay, where potential slowdown in consumer spending after the summer months can negatively impact businesses and their stock prices. Okay, so data says September, no good. No good, no good, no good. Okay, now I know kind of there's this feeling out there, there's this thinking that everybody thinks October is bad, right? Scary Halloween, spooky effect, hot October. And that really comes from 1987, quite frankly, because when people think of market crash, most people in our era are not thinking all the way back to the 1930s. They're thinking back to the crash in October of 87. So, though we typically do see volatility tick up a little bit in October, October is really not a bad month. It can be a more volatile month, but in terms of performance returns, not bad. Okay. Now, we got to remember something here, right? And we always talk about, especially on any of our presentations, our webinars, we always say this and we hear this everywhere. Past performance is not necessarily indicative of future performance, right? And all of this that we're talking about today, that's all based on historical data. Okay. There are always macro events, geopolitical issues, changes in monetary policy, tariff issues now, right? That can come and go at any time and certainly affect those trends. So you just, you got to take all of this data with a grain of salt. You really do. Okay. Does everybody kind of understand that? Hopefully. So let's go to Thor's word of the day, which is season. Season. Black Friday, you got it, Kevin. I know I've talked about this before. I don't know whether it was here on Market Minds or in one of the rooms. I was a senior in college on Black Friday, and I can recall vividly watching the TV and watching the market go down and not really understanding the effect at that time, but just that it was a massive news story. Any questions here, guys, on seasonality, whether it's August, September, or quite frankly, any of the other things I mentioned, the Santa Claus rally, January effect, whatever it might be? Because if not, I want to go into, I want to talk about something else I want to throw out here real quickly. Okay, thank you, Victor, for that. I'm going to guess that we don't have any more questions. So I want to talk about a stock. Any live videos of Thor? That would be for Jeff Lake. Jeff has many videos of Thor, and I will get some and we'll post them up here. Or if you're in Jeff's mentorship, or even in one of the rooms, maybe we'll get Jeff to post up some videos of Thor. I definitely have videos of my dogs. Thor is not my dog. Thor is Jeff's dog. Okay. It was an IPO that came out, I think it was on Friday, actually, not even Thursday. I think on Friday. Stock all over the place. Figma, 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 Figma. This is the first time, actually, that I have ever seen options listed so quickly on a new stock, on a new IPO. I've never seen it happen in one day. So I had some people ask me this morning, hey, let's look at Figma, right? Boy, those options are juicy, right? The first time options listed today, day one. You can see that here because, separate this here, there's no open interest here. Volume today, but no open interest. So brand new. Okay, and the markets are actually pretty tight. But look at this chart here, guys. Look at this chart. This thing IPO, the IPO price was like 33 bucks or something. I think it opened at 90, maybe even 100. Stock zoomed all the way up to a high of 140 plus, and now it's sitting down here at 95. Well, sure, that seems completely volatile, right? 3 days of trade, it is really volatile. But how do we know? How do we know any sort of pattern in implied volatility? Figment of imagination. There we go. Right? How would we know how to trade this thing? There's no analysis. There's no charts. There's no past performance is indicative of future performance, either from a volatility standpoint or a past performance stock standpoint. So I'm not going to trade something like this right now. Now, if I see a relationship amongst the options that something seems really kind of excuse me, out of whack from a volatility standpoint, I would do that as an arbitrage. But I have no idea whether to be bullish or bearish. I have no idea whether the implied volatility that is out there right now is accurate or not. My guess is, just from my experience in dealing with this kind of thing over the last 30 plus years, my guess is, if anything, I'd be a seller of volatility. Okay, I would definitely be a seller of volatility, but directionally, I have no clue. Anybody have any input into this? Okay, also I have a question. Looking at the relationship here between calls and puts. Okay, would you guys think that this is a hard to borrow stock, or a stock with a ton of short float because there is not enough outstanding shares out there? You can tell that pretty much from the options. How would we determine that? Jake, if I look here, look at it right here. Okay, hard to borrow. Okay, short float. But look at the monies here. They are priced exactly the same in terms of the extrinsic value for this month's August expiration. There's literally the same amount of extrinsic value. Does everybody see that? Bill, but how do we know if RSI is really at 100? How do we know? There's 3 days of trade, including the opening, the IPO, the first day of trade. So I don't think we can tell that RSI is high or low on that. Okay, yeah. So the put and call have the same amount of extrinsic value. Now, if we go out to September, it's still pretty much right in line. Um, the puts might have a tad more extrinsic value to them, but still pretty much right in line from an extrinsic value standpoint. If we move out to October, same thing. Now, company does pay a 15-cent dividend in September, but nothing else that I see is really showing that this thing is hard to borrow, short float, a concern. So if I looked at something like that right now, I would never trade it. But if somebody was asking me for advice, I'd say close your eyes, flip a coin, and instead of heads I win, tails you lose, how about heads you're bullish and tails you're bearish? That's the way you have to approach something like that. Now, that's from stock performance. From a volatility standpoint, again, if anything, I would be a seller of volatility right now, but as Kevin said, pure speculation. Ask the magic eight ball. Yes, absolutely. You always get the right answer with the magic eight ball. All right, last call here, guys, on Thor's word of the day. All right. Anything else, real quickly, while Mike is tabulating the wheel here, getting the wheel all together, that you guys want to talk about anything in the market here today, or Bitcoin rebounding from the weekend drawdown as well, and crypto in general. Opine on AMD. We sure can. Here's a chart. Here's a chart. Obviously, recently, when I say recently, we're talking about for sure since April 2nd, but recently this thing's on a tear. It's a buy the dip on any occasion here. Now, earnings can throw a wrench into that. We know that. So if I did something on earnings, which we will look tomorrow, I would look to either do an iron condor or a strangle swap. Directionally, I have no idea. Okay, so we can opine on this a little bit more tomorrow because we will be taking a look. Very similar to Palantir, which we just did a strangle swap. So looking for a move in either direction. All right. Here is our Monday wheel today. We've got a reset for anybody that won last week. I'm hoping we get some new winners in here. Let's give it a spin. Karen, Kent, Kevin, Kent, it looks like. You here in the house? I'm sure you are. I would bet that you are. I can personally guarantee that the stock will go up or down. Yeah, I think that is probably a safe bet to make. Kent, are you in the house? Did I miss you? Yes, you are. Beautiful. All right. As always, you know what to do here. You know what to do. Shoot us an email. There it is. prosperswag@prospertrading.com. Thank you, thank you, thank you. Or sideways. Thank you, everybody. Appreciate all of you. Happy Monday. Let's have a great week. We'll see you all tomorrow.